thank you for joining us today and welcome. I'm Clare Clifford and I'm the Regional Head of Tax here at ASITS for the Central Region. And I'm delighted to be joined here today by our Head of Capital Allowances, Gurj Sandhu. So Gurj and I are going to be talking through some of the capital allowances regime, explaining a little bit more what capital allowances are and giving you some guidance along the way. So Gurj, to start us off, what are capital allowances and how can businesses benefit from the tax relief?
Thanks, Claire. So in terms of sort of taking a step back and capital allowances, as part of any calculation for income tax or corporation tax, accounting depreciation is disallowable. It's added back as part of that calculation. As a result, there is a form of tax depreciation known as capital allowances. And the idea being that there is a tax relief for any expenditure incurred on plant and machinery and any other aspects in terms of potentially what the business may sort of incur on.
So I know that last year in the budget there was a lot of talk about the super deduction and how this is an extra additional rate to the normal capital allowances that are available. So can you tell us a little bit more how businesses can benefit from the super deduction?
Yes, so last year, as a way of incentivising business and investment within business, the government announced the super deduction and the enhanced special rate. And so the typical main pool rate of 18% went down up to a super deduction of 130%, and with special rate going from 6% to 50%. So as a result, businesses are able to receive tax savings a lot quicker, and actually they are receiving tax relief for more than they've incurred. It's been a very good introduction to incentivising business, but what we are finding that businesses still aren't aware. They're not fully utilising some of the relief that is available. And in terms of the super deduction, there is a time limit in terms of it was introduced from the 1st of March 2021 all the way to the 31st of March 2023. So what I would say to businesses are to speak to your local advisor, talk about potentially the work that you're doing and potentially there could be some opportunities there for you.
Okay. So is the super deduction, is that available to all businesses or are there any restrictions around who can and can't claim?
Unfortunately not. So at the moment, the super deduction only covers limited companies. So it's very much businesses that are part of as I say, limited company. So things like sole traders, partnerships, anyone that's subject to sort of income tax would be excluded from the regime.
Right, okay. So for those types of businesses, I know traditionally we've had the annual investment allowance. I assume that those businesses can still take advantage of that and get their tax relief via that relief? Yeah,
absolutely. So as part of that sort of incentivised business, the annual investment allowance went up to 1 million. So that means that businesses, partnerships, income tax sort of payers are able to accelerate up to a threshold of 1 million of their tax savings. So still a very good incentive, but unfortunately not quite the incentive that super deduction brings.
Yeah, but there's still something there to try and encourage that investment. I mean, one of the key areas that I know you and your team get involved with clients is around property. And I know that might sound a little bit unusual because the majority of clients will probably think of machinery and plant and equipment being the main capital expenditure. So what is it that you help clients with around property and what do clients need to think about when they're looking at expenditure on their property?
So in terms of myself and my team, we're all dual qualified. So I'm myself a chartered surveyor as well as a tax advisor. So what I would say is we look at the expenditure that a client may incur on their sort of capital program. So that might include, as you mentioned, plant and machinery, but also property. And within property, there are certain costs and assets that would qualify for capital allowances. These are known as fixtures. And it could be anything from the lighting within a building to the heating ventilation system that's also installed as part of a building. What we find is that it's not immediately obvious as to what the cost would be to those assets. And so myself and my team, we'll go and evaluate the property costs that have been incurred. So this could be anywhere from a property acquisition all the way to a refurbishment or a brand new build. And the idea really there is that we look at and understand the actual property side of things. We'll carry out a site survey, and the ultimate goal is to extract as much value as we can from a capital allowances perspective, and ultimately to make sure the client is claiming everything that they should be and are able to.
Yeah, no, I can see how being a surveyor as well as a tax advisor could be really advantageous there in identifying those items. That's a brief rundown of capital allowances and where we currently are. But if you do have any questions, then please do reach out to your contact at Asits or to Gurj and his capital allowances team. Thank you for joining us.